My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Let me ask you a question. Have you ever wanted to be on the other side of the coin when it comes to hard money lending? If you've been in real estate for any length of time, especially if you've been in the flipping business, the rehab business, you're probably familiar with hard money lenders. You're familiar with private money like this. Well, today's guest, zooming in for Boston, Massachusetts, has a ton of experience in a lot of areas of real estate. And recently, he's really started focusing on hard money lending. So Michael Parks, welcome to the show. Great to have you.
Hey, thanks a lot, Dave. I appreciate it. Glad to be here.
Yeah, glad to have you. So Michael, maybe tell us a little bit, you're a pretty concise kind of guy. Give us the big picture overview of how you've gotten into what you're doing today.
Yeah, so I would say, I started out as a tech professional, IT professional in my career, and I had the opportunity to run IT at a very large REIT. Actually, it was multiple REITs. Wow. With 30 billion in assets under management. And although I've always had a real estate bug, that really turned my head into, hey, this can be a big business. It's not just purchasing property yourself. And so with that, I pivoted from tech into focusing more on real estate. I was started buying my own small multis. I became a real estate syndicator with large multifamily properties. And now I've pivoted into hard money lending, just as you suggested.
Yeah. So what was kind of the time frame for that, Michael? When did you make the pivot into being a syndicator? And then when did you transition into the hard money?
Yeah, so I worked for the REITs in 2017 timeframe, and I started buying my small multis in that same time, 2017, 2018. Became a syndicator 2019 for the next few years, and did a number of deals early on, and then as I think a lot of people figured out, the market got pretty expensive on multifamily, large multifamily. So, I'm a conservative guy. I'm not a big risk taker. And so, I found myself not really doing deals because it was hard to find them. Yeah. So that's when I said, there's a better place to be. There's a better risk adjusted return out there in the lending space, because it seemed like the only ones making any money were the lenders. So that's when I pivoted, and I put the team together that is now focused on hard money lending, which we launched earlier this year.
Hey, well, that is fantastic. So big change. And well, let me ask you this. So who is your ideal client in your hard money business?
By ideal client, meaning the borrower. Yeah. So our fund strategy is built around the New England market, and specifically that's Massachusetts, Rhode Island, and Southern New Hampshire. We like those areas in particular because of the stability that we have up here with real estate prices. They're much more stable than many areas of the country, not all of them, but many. And so there's a lot of reasons we like that market. So we're looking for somebody who's doing ground up construction, fix and flip, or needs bridge debt in those areas. Now, we have done loans in other areas of the country, and we will consider them case by case, but generally that's where we're focused.
So in your experience so far, Michael, who's usually your client? Are they more the ground up construction guys, the bridge guys, or the fix and flip folks?
We've actually had them all. So, all of them are, I think what they're looking for is an asset-based lender. And that's what we are, which means although we check their background, we look for fraud, we look for bankruptcy, we look for lack of payments. We're not overly concerned with credit score and, verifying W-2 income and other things like that. We're really focused on the value of the asset we're lending against. We use relatively conservative thresholds that we lend against those values. And, these are people who, these borrowers who either can't go into a bank and tick every box, and they have a lot of boxes if you try to borrow at a bank.
Yeah.
They either can't tick every box or they don't have the time to tick every box. And both of those are great scenarios for hard money lending in general. And they are the people that come to us.
All right. Very good. So, Michael, part of hard money lending is having a whole bunch of cash to lend out. So were you one of those lucky guys born with a silver spoon in your mouth? Did the IT business turn into IPOs and gazillions of dollars in stock options? Did you just make out like a bandit with syndications, or where do you come up with the capital to loan out in the first place?
Yeah, well, I've certainly been fortunate in my career, but not maybe as fortunate as you just laid out with IPOs and whatnot. But look, I've been successful, and I do put a lot of my own money into these deals. In fact, that's how I built this business. So to answer your question directly, I have investors. I have investors that invest alongside of me, their money into the same deals I invest my money in. And I built this lending platform for myself personally as I look to pivot into, I call it like a semi-retirement plan. It's not a retirement plan. It's a different job, but it's a job that I love. It's a job that I'm passionate about. And I probably work a lot harder at it than I did it at any of my other jobs, but I love it. So it doesn't feel like
it doesn't feel like you're working that hard if you're
exactly. Yeah. So that's
well, let me ask you this, Michael, because you've had a very wide variety of experience in real estate. This is really a different kettle of fish. Now you're more on the single family home type stuff. Well, you're doing some ground up construction stuff. I imagine that's smaller compared to what the REIT was involved in. These are much smaller type projects. Was there a big adjustment for you kind of making that switch from large multifamily properties into these smaller deals?
I think a lot of the same concepts apply. I think the smaller deals are a little easier to wrap your head around, but they are different. So I'm a licensed real estate agent, so I have a lot of background that way, plus the REITs. And I did small multis myself. So I've been a lender. That means I've been a borrower, and I know what it's like to be on that side. And now to be on the lending side. It was a bit of a learning curve. And to be honest, it was part of the team that I put together that allows me to be successful with it. I didn't go out and do it on my own. I got the right partners involved with experience in the lending side. We do focus like 1 to 4 unit properties. We have done some bigger ones, but more in the call it 10 units, not the hundreds of units when I would syndicate. Mm-hmm. And that's just a different level of lending when you're into the 100-unit properties than where we're at today. I mean, it doesn't mean we wouldn't be there in the future, but that's not where we are today.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. So, Michael, there's quite a bit of competition in the private lending space and hard money space. What do you guys do to get the word out and kind of set yourselves apart from the other folks in the space?
Yeah, so as part of our team, we have an originator that has been in this market for 5 years at doing exactly this. And so it really is a long track record of building relationships with borrowers and repeat borrowers, right? So that's the best kind. When you have somebody who's already borrowed before that has delivered, those repeat borrowers are the lifeblood, right? So that doesn't mean we won't work with new borrowers. We do. You have to continue to feed the pipeline. Eventually, sometimes borrowers find that they have alternatives that are cheaper. So you certainly need to bring in new borrowers as well. And so a lot of it's relationship based. It's worked through brokers. It's worked through, mostly small developers. And when I say developer, that doesn't necessarily mean ground up. It could be fix and flip. Right. And then there are some people who are just getting into a value add property. Maybe it doesn't even have that much fix on it, but they need to execute on it quickly, and they look for bridge. And so for us, bridge just means no construction component, and we will lend higher LTVs, higher loan to values on the bridge because there's less risk without a construction component.
Of course, yeah. Okay. What are some of the, now that you've been doing this for a while, what are some of the mistakes you see people making when they're looking for this kind of capital? Like what is it that'll turn you guys off and make you say, sorry, but no thanks to a deal?
Yeah. So we look for, although we're an asset-based lender, we do vet the borrower, right? We don't have super strict rules the way the bank does. But what turns us off in a real hurry is when we uncover things that turn out not to be true from the borrower.
Ah, they're fibbing.
Yes, when they are fibbing, right? I mean, I don't care if you didn't make the payment on your boat and it's on your credit report, but you got to tell me. Like, I got a problem. Here's my problem. Here's what I'm doing about it. Mm-hmm. Don't let me find it later and then, sweep it under the rug, right? For me, the biggest thing with our borrowers is great communication. We expect our borrowers to be upfront with us about, what they need the money for, what they're going to use the money for, and basically do what they say. We understand construction always has twists and turns, but communicate with us. Don't leave us in the dark. That is the biggest thing we look for borrowers, and that's the biggest reason we walk away, other than numbers. And I guess as far as, other hard money lenders that may want to get into this business, I think I've seen a lot of people that get into this on their own, more private money lending, I think is what you'd call it, right? So they don't have the systems, they don't have the processes. So some of their big mistakes are without those systems and processes, they're not getting formal third-party evaluations that are, of disinterested parties. They're not necessarily putting all the legal documents in place, or they have some, but not as many as they should. They don't have the attorneys on staff that they need to execute post-closing. They're not doing the construction draws to make sure the work is really done before releasing the money. And those are all things that a good hard money lender will do. But some of my best investors are people who tried to be a private money lender and eventually got burned and said, what do I do about this? And I'd be like, yeah, I don't know. I can't tell you to go back and properly put your documents in place now.
Yeah. But they clue in that, hey, there's more to this than meets the eye. And maybe it's just better to invest with you guys that are doing it professionally, maybe make slightly less than they would on their own, but have a hell of a lot more security.
Yeah, well, and that's it. I mean, yes, we make a profit as part of this. So there's certainly some fees for us. But, when you start to look at how much it costs to do all the things we're doing, the fees are not that significant beyond what you're getting for the diligence that and the protection, the risk adjustment.
So one part of the business for you, Michael, is finding the borrowers and vetting the borrowers and getting that going. The other side of the business is connecting with new investors, bringing them on board and raising capital to keep funding these kind of loans. So when you're meeting with somebody that's kind of newer, perhaps they don't have that experience of being burned as a private money lender, how do you kind of explain the program to them and show them what's in it for them to invest with you guys?
Yeah, well, I mean, the bottom line up front, our program is pretty straightforward. You invest with us, and your return is based on how much you invested. Our current return targets are 8% for a $50,000 minimum, 10% for a $250,000 minimum, and 11% on $1 million minimum. So,
nice and simple. Keep it super simple.
Yeah, we keep it simple, and those are target returns. And it's preferred before our fees. And then the $1 million, a lot of smaller lenders say, "Hey, that's not really for me." But where, and for some it is, they're perfectly fine. But small fund managers that are out there, so people are building their own funds or have their own investor group, and they want to offer them private credit. If they can aggregate together $1 million of their investors, they can invest at the 11, offer it up at the lower rates, which is the same as they would get coming direct, and be able to take a bit of profit out of the middle. So some of our best investors now are actually the smaller fund managers that are trying to build, a capital raising business.
Yeah, and they don't want to have to go through the rigmarole and the pain in the butt of starting their own hard money lending business. So they partner with you. Yeah, that's really smart. It's a win-win all the way around.
Yeah.
Yeah. Okay. Well, as at the time of recording this, Michael, is right at the beginning of October 2025. What are the big plans and goals for the next 12 months or so?
So we're definitely ramping up on the lending side. I mean, that's why I said my focus is, I said I started it this year, which I did, but I really haven't been out marketing it. And so I'm glad to be on your podcast. Thank you, Dave. I appreciate that. But that is the goal. Ramp it up. We would like to do 10 million in loans this year. And with that, we're really just limited. We have the deals. We're limited by the balance sheet. We're a balance sheet lender. So that means we need investors to deploy their capital. Mm-hmm. So that's where we're ramping up. I've got a new ebook out called The Freedom Formula. It's really based on my experience of going from, a professional that did pretty well into, running my own business with the security of feeling that I can get steady income, even with the ups and downs of the market. So the book is called The Freedom Formula. I outline exactly how I think about my personal finances and how things like hard money lending fit into that, as well as other strategies. So I'd be glad to share that with your audience.
Yeah. Well, while we're talking about it, how can they get a hold of that book?
Yeah. Best way to get it is at our website, which is navwf.com. So it stands for Navigator Wealth Fund, navwf.com/bonus. And there you'll find a whole number of resources. The Freedom Formula will be one of them.
Awesome. Well, you know what, Michael, this has been a lot of fun. It's been very interesting. Congratulations on your switches from, doing tech for the big REITs, getting the real estate bug there, taking action on that, doing your own small multifamily deals, getting the bug there with multifamily, going up into syndications, kind of cluing in that the lenders tend to make a ton of the money and then making that switch again. So that's a very interesting journey that you've taken, and I wish you the best of luck with this business. I'm sure it's going to go very, very well.
Wonderful. Thanks so much, Dave. Appreciate it.
All right, everybody. Thanks for tuning in, and we will see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.